Ladies and gentlemen, my goodness, another month has passed. Egon von Greyerz is there enjoying the summer in Sweden. I'm happy to see you again, Egon, for our new July interview. Welcome.
Well, very good to be with you again, Jan. As we just discussed previously, life is a combination of enjoying every day with friends and family, and then on the other hand, the world situation is getting worse by the day, so we have to put it all into perspective. Not always easy, but we're doing our best, aren't we, Jan?
Absolutely. We do our best. We educate the people to take precautions, but of course, enjoy life as it is. What are our topics today? We're talking about collapsing assets, the consumers under stress, precious metals, of course, the BRICS currency. There are events coming or looming in August that might be interesting. But we start with crypto, a different topic, Egon. We saw, and you saw probably also, that the lawsuit of Ripple against SEC was decided for Ripple, and the crypto market recovered from the dead and came back. Do you think that was a coincidence? Because I think there is no coincidence, of course, but that brought awareness again to the cryptos and money flew in there.
Well, you know my views of cryptos. I think that they could be spectacular investment, and some people have made a lot of money. Some people have bought at the top and lost a lot of money. The authorities don't know what they really want to do with it. So now there was a partial victory in this case because when it came to hedge funds, etc., they did not accept the ruling or the previous ruling. So hedge fund, that was illegal to market to hedge fund. But anyway, to the public, it was not illegal, and that was basically what the judgment was about. For us who concentrate on wealth preservation, I don't really focus on cryptos. This is not a market that we invest in. It's not a market we recommend to our wealth preservation clients. If they want to play in that market with small money, by all means do that. We are not doing it, and therefore I don't have a strong view, Jan. It could have been a coincidence, but it could also have been planned. But I think that most countries, they don't even know how they're going to play that market. They know that if they one day introduce the central bank digital currencies, then I think they will not allow private cryptocurrencies to compete with their main currencies.
It is used for speculation, and it never turned out to be a means of exchange, what some thought it would be. But let's come to the consumer. More importantly, Egon, I found here an interesting graphic that totally puzzled me. We see here the food consumption in Germany and France, and it is declining. It is steeply declining, and it means the real household spending on food is declining. You can save money on all other spendings, but if it comes that steep to food, then the consumer must be really in trouble.
Well, yeah, this is what we've been saying for months now. The combination of massive food inflation, and we are talking about 20-30%. Some of maybe is not leveled out a little bit lately, but overall, you combine that with energy inflation and fuel, etc., rent, interest rates. The consumer is suffering dramatically in all countries. Now, the problem is that there is a carryover from the good times, and that the good times were actually, again, reinforced by all the COVID contributions that people got. So people are now spending more money than they have, and that's why you see consumer debt going up in most countries. But people cannot afford, in most countries now, certainly in Europe, Western Europe, but also in the US, people cannot afford their daily life without still using too much credit. We are going to see a continuous downtrend in consumer spending, combined with still a very high level of inflation, Jan. I do not in any way think that inflation is coming down to the 2% that central banks are still aiming for. They've never been right at any time ever. You know, they when it was under 2, they said they wanted to get up to 2. All of a sudden, it jumped to 7, 8, 9%, depending on the country, and they didn't have a clue. And they thought it was transitory, continued, and now it's come down a little bit. But I think that we actually seen the end of the correction. We've seen the end of the correction in commodity prices coming off a little bit of the highs, and we've seen the end of the correction in inflation. And I think it's going to now turn up again, and that will mean that, back to your point, that times will be even harder for consumers, and most people can't afford ordinary food anymore. And you know, we're lucky, or you're lucky in Germany, for example, you have these discount chains, Aldi and Lidl, who actually are all over Europe now, and even all over the world in some places. I mean, they're actually doing a lot to keep the prices down, but still, it's not enough. Consumers are suffering, and as I said, they're eating worse food and less food, and sadly, that will continue.
For our viewers, Egon, I will put another link into the description, a research by McKinsey, and that is also interesting. It confirms that view. People look to save, try to save money, they buy less expensive food, they move to other food, buy promotional stuff, no-name brands, they do everything to save money. That will be in the description box. Let's move to another problem for the people in the USA in particular. Evictions are rising. I quote, "A looming rent increase in New York City is poised to force the most vulnerable renters onto the streets at a time when eviction rates nationwide have been steadily rising. And the worst cities are seeing eviction filings increase by more than 60%. Rent increases anywhere lead to more poor people and struggling families being kicked out onto the streets." And a second source, Princeton University's eviction lab, which tracks evictions in 34 cities and 10 states nationwide, found that in some cities, eviction filings are up by 50% or more from pre-pandemic figures. I would say that is a pretty dramatic situation in the USA.
Yes, and the US market is slightly different to the European market, Jan, because there you have not the same controls and regulations when it comes to rent and rent increases and evictions as we have in Europe. So that, and of course, what we've seen in the last decade or so is major institutional buyers buying up blocks and blocks of apartment buildings and increasing the rents, and you know, that's happening now at the same time as interest rates have gone up, and they have to finance this at a higher cost, and they're putting that onto to the renters, and the renters can't afford it. And so in America, you know, the evictions will continue. And if you travel around America and go to the poor areas, you see people living in the street or in cardboard boxes in many places, and that will clearly increase. And that's obviously a disaster for a lot of people, especially families. In Europe, it's slightly different, as I said, because you have rent controls, and it's harder to evict people in most countries. But nevertheless, there are rent increases there, and of course, people who own houses have increased costs in mortgage repayments if they don't have a fixed rate, and then they have increased energy costs, dramatically increase in energy costs. All around the Western world, we're seeing these major increases, and again, Jan, it contributes to the fact that, you know, consumer hasn't got enough money to pay for necessities today, never mind luxuries. And we are going to see, you know, a major decline in luxuries also. But you know, let's go back to necessities. Well, that's what it's all about. I mean, you know, living here on the water in the summer. I mean, I hear from the people who are petrol stations on the water for boats. People are filling up a lot less now because that's a luxury. People can't afford luxuries anymore. Okay, that's for a very few people in the world, and not many own a boat. But nevertheless, it's significant because, you know, we've seen that in cities now, people are still spending a lot of money going to restaurants, etc. But that's coming down too. we are going to see a dramatic downturn in income, in disposable income, in discretionary income, and eventually also in wealth. And it's going to be a misery for people. Sadly, this is what we've been talking about for years, Jan. It was coming, it had to come, and it's coming now. It's not coming as fast as maybe we would have expected, but nevertheless, it's here. A few people will suffer very, very sadly.
But Egon, there is one reason why many analysts and investors say the USA is still the prosperous country, and that is the labor market. Let's have a look. Total non-farm payroll employment increased by 209,000 in June 23, as employment in government, healthcare, social assistance, and construction continued to trend up. Non-farm employment has grown by an average of 278,000 per month over the first 6 months of 23, lower than the average of 399,000 per month in 22. My guess is now, Egon, that the total employment is close to a breaking point. And I would even argue we see that many consumers are under stress. But if you have to pay your bills, then you look maybe for a second or a third job. And this might be one of the drivers of the fantastic US labor market, but that might be a total fake.
Well, I have to add one factor that Jan, as Mark Twain said, there are lies, damned lies, and statistics, and the employment figures are more lies than statistics, and they're constantly manipulated. They create jobs, they take off figures that should be added, etc. But the most important one in this figure, there's over 200,000 is a non-farm payroll, plus 200,000. The last month. But you know that in that figure, there was 400 increase in 452,000 part-time workers. So people go from full-time to part-time, and because the figure we're looking at that they actually announced is the total workers that includes part-time, but part-time increased by 450,000, which means that that is, again, the fact that the total increased by over 200,000, but a lot of people had to move from full-time to part-time, almost 500,000. And that really is showing that there is now pressure starting on the labor market. And therefore, the trend is going to change gradually. People are, first of all, it's lower paid jobs that are increasing. Secondly, it's now a lot of part-time jobs that are increasing at the expense of full-time jobs. So it means that gradually the economy is going to decline, and then all of a sudden it's going to do it dramatically. And that's what we're going to see in the next 6 months or so, yeah.
Let's have now a look to Europe, Egon. We are faster on the way downward. There are several reasons for moving down, but the race to the bottom, I think we will win it. Let's have a look. Europeans are becoming poorer. Yes, we are all worse off. And here are interesting graphics, Egon. We see here that the average annual wages in the USA still growing. Germany, UK, other European countries from 19 to 22 already shrinking. But now the kicker. GDP in current prices 2008 versus 2023. Europe, nearly no growth. USA, big growth. So we have a serious problem here in Europe, but nevertheless, the dollar is tanking. So the problems of the USA are completely different. But as said, we are all on the race to the bottom.
Yeah, again, I think we're back to lies and statistics. I don't believe the US figures. These GDP figures are not measuring the real economy. And the massive increase in debt and deficits that we're seeing in the US currently is really what is contributing to the fake figures that GDP shows. And I think the real economy in the US is a lot worse than those figures are showing. And the debt situation it's just going to get worse. And in the end, people will realize that all of that debt is going to have no value, and we can talk about that later, maybe, as we see the coming debt implosion that I'm expecting.
The USA is the master of deception, we know that, and they still have their banking crisis looming. I'd like to quote something from Fitch here, Egon. Christopher Wolfe said in an interview, we still believe it's a negative environment for the industry. He's meaning the local banks. It was punctuated by some turmoil that was unique to a handful of institutions, but there was contagion effect that hit others. And about Europe, he says the following. We have a deteriorating sector outlook for Western Europe banks, but that is mainly due to 3 large countries with deteriorating sector outlooks: Germany, Italy, and the UK. Germany, that is another topic. Many people in other countries can only scratch their heads what's going on here. But we are all, as said, on the way downward, and the USA in particular is threatened by the looming banking crisis, and that's not over.
Oh, the banking crisis has just started, Jan. The bubble in asset prices is contributing to an extremely risky situation within the banking system. I mean, there are loan portfolios. I wouldn't touch it with a barge pole. The loan portfolios are going to fall dramatically. Just take commercial property in any country in Europe, especially in Germany, but even in the US. I mean, those loans are looking very, very ugly. And the commercial property market is coming down rapidly in all countries. Going to be major, major losses there of billions and eventually trillions. And the same will happen in the housing market also, when people can't afford the new interest rates, going from 1% to 3, 4, 5% in many countries. That is more than most people can afford. And that's going to all affect the banks. So, the mid-March fall of 4 banks in the US was temporarily stopped by measures by the Fed and the banks, but that's going to come back again and hit the world badly. So I wrote about in my latest article about an implosion of debt, which I expect, and if you add to that what I think is going to be the 2-3 quadrillion of derivatives outstanding in the world, that can happen in a fraction of a millisecond. I'm drawing a parallel with the Titan submersible vehicle that actually disappeared near the Titanic. An implosion of that kind, it happened so quickly that nobody even noticed inside the ship what actually happened. And I think a debt implosion can be maybe not as fast, but it can happen so fast that no one has time to react or do anything about it, because this bubble is so big, and when it implodes, it's going to go so quickly. And that's what we should be worrying about as investors and savers and wealth preservationists.
Not to mention the situation of the state finances in the USA. The taxes are decreasing, the spending is increasing, the gap is widening more and more. One link will be in the description box. That looks really awful. And then we have, as I mentioned at the beginning, the possible gold-backed BRICS currency on the horizon that will be decided, or is supposed to be decided, in August in South Africa. But there are different voices. Jan Nieuwenhuis wrote a very good article, and he is saying there it's rather not gold-backed. But I think, Egon, in any way, the dollar is weakening, the trade is shifting from using US dollar to local currencies, to ruble, Chinese yuan, Brazilian real. So the dollar is also coming under pressure from this side. And it speaks for gold, of course.
Absolutely. When Trump took over from Obama, US debt was 20 trillion. And at that time, I forecast that within 8 years, that it would be 40 trillion. Now, there's a very, very simple calculation, because in the last 40 years or longer, US debt has on average increased or doubled every 8 years. And so we are a bit more than halfway now from those last 8 years, from 20 trillion, but we're already at 32.5 trillion. And definitely by beginning of 25, when next president takes over, whoever that will be, the debt will certainly be at least 40 trillion. And that, nobody believed that forecast when I made it 7.5 years ago, right? Or so 7 years ago. But it's now a fact already. And that's what we're going to see. The debt explosion, first implosion and at some point implosion, but the increase in debt short term is going to increase dramatically, exponentially probably, because there'll be more and more need for money printing to save banks, for social security, to finance wars, etc. All these things that there is no money for. It's interesting, isn't it, that when it comes to a war, for example, there is unlimited resources available of money and weapons, although there is no money. So for any purpose that suits the leaders, they just print money. But the big requirements will come in the financial system. That sadly is going to lead to first massive printing on a big scale, and then at some point an implosion of the debt. But as you say, it is guaranteed that we will have for now the next few years, whatever, before the debt totally implodes, we're going to have money printing on a scale never seen before. And that, combined with all the other factors of the world going from a consumer debt-led economy to, in the West, to the East and the South, of a commodity-based economy and manufacturing-based economy, that will lead to, of course, a massive increase in commodity prices and demand for commodity. And the leader, as far as we're concerned, is the king of all metals, which is gold. Quickly followed by silver, because silver is also going to go up dramatically. So like that, the benefit's going to come. Jan, we've been into gold for over 20 years, and I've never worried a day, because I know governments are working for it. Governments are going to continue to destroy the currency, and that's all that gold is reflecting, and is going and probably will reflect a bit more than just than the decrease or debasement of currencies will probably also go up in its own right, because I think that central banks worldwide are going to turn from worthless dollars to gold as their reserves, and because nobody wants to hold dollars, as we see the dollar declining dramatically now, and that means that you can't hold your reserves in something that is going down by the day. It's going to be worthless in a few years' time, and therefore gold will be the obvious reserve asset for central banks, and that will lead to a major revaluation of gold, not of a small percentage, but of a major percentage. So whether the BRICS will come with a new currency or not, I'm not sure that they will now. I think it's backed by gold. I mean, it'll take longer, but nevertheless, the trend with the central banks holding gold as reserves, plus the money printing, it's so favorable to gold and to silver and other commodities also, that it's such an easy solution to a problem where people don't know what to do with their money. If they take the wrong decision now, they're going to be and continue with stocks and money in the bank and bonds, etc. They will lose most of their money. But if they put it into money that has been around for 5,000 years and always maintained its value, they will not only preserve their value, but their wealth, but also enhance it. It's so important for people to realize that today, because we're standing at crossroads, and people who take the wrong choice will end in misery, and that's what people should consider today.
Nevertheless, Egon, there are strong arguments why or when somebody should not own gold. Let's have a look. That was in one of your latest articles. When you should not hold gold, there are no deficits and there is a balanced budget. There is negligible or no inflation. There is no debasement of currencies. There is strong statesmanship based on real long-term values. What can I say, Egon? We rather stick with gold because nothing of those arguments is met for a long time.
Well, Well, as I put in the next two lines, you didn't read them. So the next two lines says, well, if that happens, we will also see elephants flying here around us, central bankers flying by their own wings, gold dropping from the sky. But, that's probably not likely. So therefore, we will never going to have, for the foreseeable future, a sound economy that supports sound money. And that's what people should take heed of. And take the measures necessary now to survive what is going to be a very difficult period ahead.
That was the final statement, Egon. I thank you for the July issue of our interview. Enjoy the summer in Sweden, and thank you. Bye-bye.
Good to talk to you. Thank you very much, Jan. Thank you.
Thank you. Bye.